All right, listeners, ready for today's deep dive? We're taking a close look at Kimberly-Clark's Q4 2024 earnings call.
You know, the folks behind all those everyday essentials, diapers, tissues, the whole shebang.
They just wrapped up what they called an outstanding year, so we're digging into the transcript hot off the press, trying to see what we can learn, for the future.
What's amazing is they actually blew past their own long-term goals for 2024.
Really?
Yeah, and this is after a massive company-wide restructuring, all under their Powering Care strategy.
So what did they change?
Well, they basically Marie Kondo'd their entire business, split everything into three main segments: baby and child care, adult care, and then essential products.
And I guess they tossed out some things that weren't sparking joy anymore.
Exactly. Things like their private label and PPE lines are gone.
It's kind of wild they were willing to make such big changes, especially while dealing with all the inflation craziness.
Oh, absolutely. We can't forget about that. But they came out on top. It seems like their gamble really paid off.
So what stood out to you from the call?
One thing that really jumped out was their emphasis on what they call volume and mix-driven growth.
So not just raising prices.
Right. They're actually selling more products, not just relying on price hikes anymore.
Interesting. Most companies have been focusing on raising prices lately to fight inflation.
Yeah, and that's what makes this so interesting. It shows they're confident in their brands, that they can come up with products people really want.
So are people buying more?
They are. They reported organic sales were up 3.7% for the year, and they beat their own earnings per share growth target.
Wow. Okay. So where are these sales coming from?
It seems like they are leaning hard into their big brands, especially in things like diapers and tissues.
Makes sense. Those are their bread and butter, right?
Exactly. Their marketing seems to be working too. They're gaining market share both here in the US and in China, which, are their two biggest markets.
That's huge. And they're not just focusing on those two markets, right? They talked about global growth.
Right. They're taking what works in one place and using it everywhere else. They call it their global growth playbook. Pretty clever.
It is. And they're also trying to get as much done as possible with fewer resources, right? Becoming more efficient.
Oh, they're all about efficiency. It helps their profit margins, too.
How so?
Well, they're hammering on this idea of SGNA leverage, basically making the most of their spending on marketing and admin stuff.
So becoming leaner and meaner, I guess, to maximize profits.
You got it.
But it can't all be good news, right? They mentioned some challenges, too.
Right. They did talk about how some consumers are using fewer products because of, money problems.
Yeah, that makes sense. If you're on a budget, you try to make those diapers last a little longer.
Right.
Right.
Exactly. And it's something they're watching closely, especially in markets where people have less financial flexibility.
So what about the future? What are they expecting in the coming year?
Well, they think things will be pretty steady throughout 2025, which is good news for investors who like predictability. And they think gross margins will continue to improve, though maybe not as quickly because they are putting money back into their supply chain.
So they're thinking long-term, prioritizing growth over just squeezing every last penny out right now.
Exactly. And to support that, they're really ramping up their marketing to support that whole selling more stuff strategy. It's clear they want to build those brands into powerhouses.
Makes sense, since they are focused on moving more products and not just jacking up prices.
You got it. It's a gutsy move, especially with the economy being what it is. But if they can pull it off,
The rewards could be huge.
no doubt. We'll have to see how it all plays out.
Well, speaking of interesting, it's time for our favorite segment.
Oh, here we go.
The one where we let our minds wander and explore the what-ifs.
Remember, folks, this is not financial advice.
That's right. This is all hypothetical and purely for entertainment. So what if Kimberly-Clark's success in emerging markets, particularly their focus on selling more products, creates a ripple effect across other consumer goods companies?
Okay, I like where this is going. Explain it a bit more.
Well, if Kimberly-Clark is seeing big growth in places like China and India, it means people are buying more of their stuff, right? Diapers, tissues, all that.
Right, so you're thinking if people are buying more of those basics, they must have more money to spend.
Exactly. And that extra cash could lead them to buy more of other things too, like a chain reaction.
Interesting. So one company's success leads to opportunities for others.
Right. What if we could somehow take advantage of this by investing in companies that would benefit from this spending spree in emerging markets?
That's a bold idea, but it's not totally crazy, right?
Well, there are definitely risks. We're assuming Kimberly-Clark's plan actually works. The people buying more diapers means they'll buy more of everything else, and would have to pick the right companies to invest in.
All good points. It's all just a thought experiment anyway. But it's fascinating to think about.
It really is. It shows how interconnected the global economy is, right?
Yeah,
One company doing well can create opportunities for a whole bunch of others.
definitely. And it shows how important it is to keep an eye on trends and connect the dots to see the bigger picture.
Exactly. And while we're not giving financial advice, maybe this sparks some ideas for our listeners to research on their own.
Always good to get those mental wheels turning.
Okay, let's focus back on Kimberly-Clark for a bit. What else was important from this earnings call?
One thing that jumped out at me was their obsession with efficiency. They're doing everything they can to streamline their operations.
So they're really focused on squeezing every last bit of value out of every dollar they spend.
You got it. And it's especially important since they're also pumping money into their brands and trying to sell more products.
It's a balancing act, being efficient, but also investing in the future.
Exactly. And they seem to be doing a good job of it.
They also talked about their global plans, how they're being choiceful about the markets they invest in.
Oh, yeah. They already pulled out of some smaller markets like Nigeria and Bolivia, where they didn't see much hope for growth.
Makes sense. So they're focusing on the big ones, the US and China, where they already have a good foothold.
Exactly. It's all about making the most of their resources and making sure their investments pay off.
Smart move. So far, it seems like their approach is working. They're hitting their targets, investing for the future, and navigating the challenges with a clear vision.
Absolutely. They're adapting to a changing world.
Well, before we wrap up this first part of our deep dive, let's go back to our This Is Not Financial Advice segment for a sec. Remember our ripple effect trade idea?
Ah, yes, our hypothetical thought experiment. It was fun to think about.
It was. So for our listeners who might have missed it, can you remind us what that was all about?
Of course. The basic idea was, what if Kimberly-Clark's success in emerging markets, especially their focus on selling more, volume, could create a ripple effect on other consumer goods companies?
The idea was that if people in those markets are buying more of Kimberly-Clark stuff, it means they have more money and might spend more on other things too.
Yep. It was all speculative, but based on a reasonable idea.
So we were trying to figure out what a basket of stocks might look like that could benefit from that whole scenario.
Right. We talked about diversifying across different sectors, focusing on companies with strong brands and good operations, and considering the whole regulatory and political scene in those emerging markets.
It was fun to try and connect the dots and explore how the global economy works.
It really highlighted how important it is to think outside the box and consider the big picture.
Okay, that's a great transition to the next part of our deep dive. We talked about Kimberly-Clark's numbers, their strategies, and even some crazy trade ideas. But now, what about the big picture? How does all this fit into what's happening in the world?
That's where things get really interesting. We'll tackle that head on in the next part.
Stay tuned, listeners. We're about to zoom out and look at the big forces shaping the global economy and how Kimberly-Clark's story fits into all of that.
All right, let's dig a bit deeper into some specifics from this call. Remember how Kimberly-Clark reorganized into those 3 new business segments last year?
Yeah, baby and child care, adult care, and essential products, right?
You got it. That seems like a big part of their powering care strategy. It makes them more nimble, more focused.
So they can really use their expertise in each area, right?
Exactly. It's like divide and conquer. Instead of teams spread thin across tons of products, they've got experts zeroed in on each segment, like specialized units, each tackling their own mission.
Makes sense. So how did those segments actually do? What were the highlights from the call?
Well, for all of 2024, they reported organic sales growth of 3.7%. Pretty impressive considering they were also ditching product lines and dealing with a crazy economy.
And they beat their own earnings per share target, right? That's always a good sign.
Absolutely. And they're projecting 6% to 8% organic sales growth for 2025. Ambitious, but considering how they did, maybe not out of reach.
We got to remember, though, a lot of that growth depends on selling more stuff, not just raising prices. That's a big change for them.
It shows they're serious about innovation, that they believe they can make products people actually want, not just rely on price hikes.
They mentioned some specific wins in the US and China.
Oh, yeah. North America, their personal care sales jumped 6% in the fourth quarter, which is huge. And get this, their Huggies diapers saw double-digit volume growth in China.
Wow. Those are some serious wins.
Yeah.
Really shows the power of their brands, right? And that their marketing is working.
Couldn't agree more. They're putting a lot of money into those brands, and it's paying off, especially in those key markets.
It's not all perfect, right?
Yeah.
Weren't there some challenges they talked about, too?
Of course, there are always challenges. They mentioned the possibility of retailers destocking, which could hurt sales growth in the next few quarters.
Can you explain what destocking is for our listeners who might not know?
Sure thing. Destocking is when stores reduce the amount of stuff they keep in stock. Leads to fewer orders from suppliers, companies like Kimberly-Clark.
Ah, so it's like retailers managing their own costs,
Yeah.
especially when the economy is uncertain.
Exactly. It's not necessarily that people aren't buying Kimberly-Clark's products, but more a hiccup in the supply chain. Something to watch, but not a reason to panic.
Okay, that makes sense. They also mentioned currency fluctuations as a potential problem.
Yep. That's always a worry for global companies. When exchange rates go up and down, it can mess with profits, especially if a lot of your sales are overseas.
It's a reminder that the whole world economy is connected, right? What happens in one place affects everything else.
For sure.
But even with those potential problems, Kimberly-Clark seemed pretty confident they could handle them and still hit their growth targets.
Oh, yeah, they definitely did. They kept talking about how focused they are on productivity savings. It's crucial for keeping profits up when things are shaky.
What exactly does productivity savings mean? What are they actually doing?
Basically, doing more with less, streamlining their operations, squeezing more value out of every dollar. It covers everything from making their supply chain better to cutting costs across the board.
So less waste, more profit. Sounds like a good plan.
You got it. And they're also focused on what they call SGNA leverage. Stands for Selling, General, and Administrative Expenses.
Can you break that down a bit more?
Sure. Basically means they're aiming to reduce their overhead costs, like in marketing and admin stuff. It's all about being lean and efficient.
But didn't they also say they're doubling down on marketing? Seems kind of contradictory.
It's a good question. But remember, they're also saving a ton of money with those efficiency moves. They might actually offset the extra marketing spending with savings elsewhere.
So it's like a balancing act, trying to be a lean, mean profit machine while still investing in their future.
Exactly. They're trimming the fat and putting that money back into the important stuff, innovation, marketing, their supply chain.
They also mentioned being choiceful about some international markets. What do they mean by that?
They've already pulled out of some smaller markets, like Nigeria and Bolivia. Places where they didn't see a clear path to making money. Now they're focusing on the big guns like the US and China, where they've already got a strong presence and tons of growth potential.
So playing to their strengths and putting their resources where they'll have the biggest impact?
Exactly. It's all about maximizing their return on investment and making sure they grow in a sustainable way.
It seems like this whole strategic approach is working pretty well for them, exceeding targets, investing in their future, and handling the tough stuff with a clear plan.
It's pretty impressive how they're adjusting to a world that's constantly changing and staying ahead of the game.
Now, before we wrap up this part of our deep dive, let's jump back to that "this is not financial advice" segment. Remember that ripple effect trade idea we were tossing around?
Oh, yeah. That hypothetical scenario. It was fun to explore those what ifs.
It was. Can you remind our listeners what it was all about, in case they missed it?
Of course. We're basically wondering if Kimberly-Clark's success in emerging markets, especially their focus on selling more stuff, volume, could trigger a ripple effect that helps other consumer goods companies.
The idea being that if people in those markets are buying more of Kimberly-Clark's products, it means they have more money to spend, and that might lead to them buying more of other stuff too.
Exactly. Purely speculative, but there's a logical thought process behind it.
So we were trying to imagine what kind of stocks would benefit from that whole situation.
Yeah. We talked about diversifying, picking companies with strong brands and efficient operations, and, thinking about the political and regulatory landscape of those emerging markets.
It was good exercise in connecting the dots and understanding how the global economy works.
It really highlighted the value of thinking outside the box and seeing the big picture.
Okay, that's a perfect segue to the last part of our deep dive. We talked about Kimberly-Clark's numbers, their strategies, even some wild what-if scenarios. But now, how does this all fit into the bigger picture? Where does this story fit in the global scheme of things?
That's the really juicy part. We're going to tackle that head on in the next segment.
Stay tuned, listeners. We're about to zoom out and explore the big trends shaping the world economy and see where Kimberly-Clark's journey fits into that massive story. Okay, we've dug into a lot with Kimberly-Clark, those impressive numbers and all their strategic moves. But now, let's zoom out. Big picture time. Where does their story fit into the global economy?
That's where things get really interesting. Kimberly-Clark's journey, it's like a mini version of a much bigger trend happening right now. We're seeing a major shift in global economic power. Emerging markets are taking center stage.
We hear that all the time. but sometimes it's hard to really understand what it means in the real world. What does that shift actually look like?
Okay, think about it this way. Consumer spending is booming in places like China, India, Southeast Asia. These economies are growing fast. And there's a whole new generation of consumers entering the market with more money to spend than ever before.
And companies like Kimberly-Clark are definitely paying attention. They're not just testing the waters in these markets, they're going all in, changing their products and strategies to cater to these new customers.
Exactly. It's a race to grab a piece of this growing market, and the stakes are high. The companies that win in these regions will be the ones who get the culture, build strong brands, and make products that meet those changing needs.
That's a pretty exciting challenge, right? But it's not just about selling more stuff, is it? These emerging markets also come with a whole new set of risks. They're more complicated.
Absolutely. The economics and politics in these regions can be unpredictable. Things can change quickly. If a company puts all its bets on one market or region, they could be in trouble if things go south.
So spreading the risk is key, right? Not putting all your eggs in one basket.
Exactly. It's about finding that sweet spot between going after growth and managing risk.
It seems like Kimberly-Clark is striking that balance pretty well. They're being smart about where they invest, and they're not afraid to walk away from markets that aren't working.
Yeah, and they're playing the long game, building sustainable, profitable businesses in these regions, not just looking for quick wins.
Their commitment to sustainability seems like a good fit for those markets too, right?
Yeah.
Consumers are caring more and more about the environmental and social impact of what they buy.
It's more than a trend. It's a fundamental change in how people think about their purchases. Companies that ignore it are going to get left behind.
So Kimberly-Clark's story is bigger than just diapers and tissues, right? It's a story about how the global economy is changing, how consumers are changing. It's about the challenges and opportunities of doing business in a world where everything's connected.
It's a story that's still being written, and it'll be fascinating to see where it goes from here.
That's a great point. It reminds us that business never stands still. It's always evolving. The companies that can adapt and come up with new ideas, they're the ones that'll succeed.
Couldn't have said it better myself. It's all about embracing change, seeing the trends coming, and making smart choices.
Well, we've covered a lot of ground today. Kimberly-Clark's financials, their strategies, their sustainability efforts, and even some crazy what-if trade ideas.
It's been a whirlwind of information, but hopefully our listeners got some valuable insights, not just about Kimberly-Clark, but about the whole consumer goods sector and what's happening in the global economy.
That's what we aim for here at Talk Tickers, right? We break down the complex stuff, analyze the trends, and hopefully get people thinking and talking.
We're your guides to the financial markets, helping you make sense of it all, and hopefully having some fun along the way.
Absolutely. And just a reminder, as always, this is not financial advice, just two podcasters sharing our thoughts and opinions.
But hopefully we've given our listeners some food for thought, something to dig into and research on their own.
Definitely. So until next time, keep exploring, keep learning, and keep those brains working.
Stay tuned for our next deep dive.